Welcome. Today we are going to be talking about the importance of investing as an entrepreneur. My name is Dashaun Outlaw. You can find me on IG at I am Dashaun Outlaw. So let's get started. Why should we invest, right? So we invest to expand the family's buying power, to grow our retirement savings, to ensure the future financial stability of us and our heirs, to trigger the power of compounding and exploit it, to fight the pressure of inflation, right? If our money is worth less and less each year, and we can use strategies for tax mitigation purposes. So, why are stocks the greatest asset class, in my opinion, right? For one, they have a low cost of entry. For two, they are diversified equities. They can produce profits when the market goes up and down, compound interest again, which is very important, and you can play them long, mid, and short term. What is the stock market? So, the stock market broadly refers to a number of exchanges and other venues in which shares of publicly traded companies are bought and sold. Stock markets are a vital component of the free market economy, which means it doesn't matter what you look like, smell like, how tall you are, how short you are, how much you weigh, how old you are. You can get money in the stock market, right? So, what is a stock? A stock, also known as an equity, is a security that represents the ownership of a fraction of a corporation. This entitles the owner of the stock to a proportion of the corporation's assets and profits equal to how much stock they own. So the more shares you own of the business, the more of the profits you are entitled to. The SEC, the Security Exchange Commission. These are the people who investigate fraud by CEOs and accountants in the stock market. These people, if you get scammed or shammed in the stock market, these are the people that investigate the company, whoever's involved, to try to get your money back and bring them up on possible charges. We saw that the SEC just brung Elon Musk on trial about some tweets that they say swayed investors on investing in the Tesla stock on his tweets, right? So how does a company get onto the stock market? The company needs to raise capital to expand their business. So they say, hey, let me put a portion of my business on the stock market so people can purchase them so we can use the money to grow. So a company sells a portion of the business on the open market for investors to own a piece of it. So let's talk about a bull versus bear market. Now, we're currently in a bear market. A bear market is when stocks fall 20% from its recent highs, and a bull market is when there's a 20% rise after the fall, right? So at the end of every bull market, there's a bear market, and at the end of every bear market starts a new bull market. Right now, we are in a bear market where prices are low, deals can be had. So how do you make money in the stock market? One way is price appreciation. The other way is through dividends. And we're only talking about long-term investing. We're not talking about trading yet. So those are the two ways you make money, long-term investing, the stock price going up or getting a portion of the profit paid out to you as a shareholder by a company from excess cash. Major indexes: Dow Jones Industrial Average, the NASDAQ, and the S&P 500. When you hear people talk about the whole market, they can be talking about one, if not all three of the major averages. There are 11 sectors in the stock market, which you can read on the screen. You can find a sector that you feel comfortable in, that you have expert knowledge of, or have been exposed to, or worked in at your job or in the business that you're an entrepreneur with. Let's talk about market cap. So this is how we judge the size of a business, right? Market cap refers to the total dollar market value of a company's outstanding shares of the stock. Outstanding shares mean shares available on the free market. This is calculated by taking the stock price and multiplying it by the number of outstanding shares on the market. That's how we judge how big or how small a company is. So there are three main cap sizes. Small cap starting at 300 million to 2 billion, mid cap starting at 2 billion, ends at 10 billion, and large cap, these are the big companies, 10 billion and above. So let's talk about what makes a stock go up and down. Supply and demand, very simple. If there are more buyers than sellers in the market bidding the price up, then the stock goes up. If there are more sellers than buyers in the market selling the price down, then the stock price goes down. What influences supply and demand? Market sentiment, i.e. fear and greed. Are we in a pandemic? Are we in a recession? Are we printing money? Is inflation high? Is inflation low? What do bonds look like? What do treasury yields look like? That is what determines market sentiment. Are earnings growing? Is the media positive on the market? And what are our politicians doing? Let's talk about some risks. There are company-specific risks, which is probably the most prevalent threat to investors who purchase individual stocks, which you can read on the 10K. Volatility and market risk as a whole, opportunity cost, and liquidity risks. Let's talk about how we mitigate those risks. We can mitigate those risks by investing in index funds, having a longer investment time horizon. We do not buy at all-time highs, and we only invest in quality companies with great fundamentals that are growing their market share. What makes a good company? We got to have effective management. We got to be able to trust the CEO, and they have to have a strong board of directors. We need consistent earnings growth, right? They need to be growing their net income year over year on a consistent basis. We need them to have a moat, like a moat protected a castle. In the old days, we need the company to have a moat to keep its competitors from taking its market share and that affecting their bottom line and top line. We need to invest in a growing market, right? If you were to tell me that you were going to invest in wired house phones, that would be a shrinking market. I would not suggest that. We need a growing market. They need to have a solid core product. The product that draws people to their business needs to be solid, and it needs to have longevity 10, 20, 30 years into the future. They need to have solid financials. Their debt needs to be under control, and they need to be being very efficient with the money they're making. And they also need to be shareholder friendly. They need to return value to shareholders, whether it be in the form of dividends or share buybacks. Investigating management. Research the company CEO, starting with the investors relations page. Very easy. We evaluate the business performance before the CEO arrived, how it's currently doing, and what the CEO did at the business that it came from. We listen to the earnings calls and read the letter to shareholders from the CEO and management to determine if they can be trusted or not. And how does the CEO treat employees? We can look on Glassdoor, go into the business and ask, right? Or we could just Google job reviews from people who work there or used to work at the company. Earnings. So a company's earnings is quite simple. It's profit. Take a company's revenue from selling something, then subtract all the costs to produce it, right? Earnings season. Every quarter, publicly traded companies get on a webcast phone call that is free to listen to, and they have to tell you how much did they sell last quarter. Did they sell what they projected? What are they projecting to do next quarter, right? And why are earnings so important? Because that's when we figure out the health of a business, the efficiency of its management, and the tone of the call. This is very important. What are moats? A moat is a key competitive advantage that not only sets a company apart from its competitors, but protects a company's business. Examples of a moat could be a cash moat, a switching moat, and a network effect. A network effect would be a company like Meta or Facebook. The more people on their app, the more powerful and stronger their moat and vitality of their business is. How does Meta make money? They make money by selling ads. Their ads become more valuable with the more people that are on the app. Let's talk about a switching mode. I'm giving you this presentation on a brand new MacBook. I have 2 iPhones. I have another MacBook. I have AirPods. I have an iHome. I have multiple iPads, right? I am in the Apple network. It would cost too much money to switch to go to Google or Android or some other company. So Apple has a high cost switching mode. They also have a moat called pricing power. No matter how much that iPhone costs, when the new one comes out, I'm going to buy it along with everyone else. Not only rich people, poor people too. When you have pricing power and you get people to buy your product, no matter what, that is a sign of a moat. How are moats built? Companies may build moats by achieving economic scale, strengthening their brand, or getting special statuses from the government. That last one is key. They may also form strict strategic partnerships and develop a system to produce or provide a service cheaper than the competition. Look at Walmart. They sell all of their products on consignment. They are the low cost king. Walmart usually has the cheapest price on everything. They get their inventory on credit, sell it cheaper, and collect the margin, right? It takes special management and unique intelligence to create a business and solidify a moat. You have to be a smart CEO or top manager to solidify your moat in the stock market. Great CEOs and board of directors are responsible for creating and maintaining durable moats. They have to navigate it. Other companies are always trying to step in and get a piece of your market share. We see this a lot in the semiconductor space. Companies like AMD are taking market share away from the big dog Intel that used to run that space. Why are moats so important? With a moat, a company may receive cult-like loyalty from its customers, developed and retained pricing power like Apple, and the companies may even get legal protection from the government. That one is big. Companies with a strong, durable moats normally have better balance sheets, right? Great credit ratings and can increase revenue and earnings without much hassle, which is what we look for. The more earnings go up, the more revenue goes up, the stock price is probably going to go up too. Durable and efficient moats make it harder for the competition to take away market share. Financials. We need to look at the income statements. That shows if the company made or lost money. You can look this up on a company's 10K or 8K. They come out every quarter. Balance sheets come out every quarter as well. This details everything the company owns or owes to its creditors, right? Cash flow statement. That shows where exactly the money came from and where it goes. It shows the money coming in the business and the money going out of the business. What makes a good investment? So I can tell you great companies, right? But that means nothing. Price means everything. If you buy the best companies at all-time highs, your portfolio isn't going to perform well, right? So we need to own great businesses at great prices in order for it to be a great investment. We want a minimum of 5 years to hold these companies, to let the stock price move, to let the company do its thing, right? And make you some money for your equity to go up. We need to understand the business and its risks so then we can mitigate them. And we need to invest in a down market. Right now, we're in a bear market, right? We need to wait for bear markets, recessions, election years, wars, natural disasters, or all of them together. When people are afraid leaving the market, that's when we need to invest, when the stock market is on sale. The optimal holding time for investments, 5 years when buy and hold, 10 to 20 gives you the greatest returns. That is because you will get the greatest price appreciation and or the power of compounding through dividends. The longer, the better. If you can get a 20 or 40-year hold on a great business that stays great for that long, you'll knock it out the park. Let's talk about investing versus trading. Investing takes a long-term approach to the markets and often applies to such purposes as retirement accounts, like your 401ks, your 403bs, your traditional IRAs, or your Roth IRAs. Trading involves short-term strategies to maximize returns daily, monthly, quarterly, or weekly, right? But this also comes with greater risk and greater taxation. That is something to think about. You also need more skill to trade. How much money do you need to get started? You can start investing. You can open up an account with $5. There are stocks that are $20. They may or not be great ones, but you can start investing with little money in the stock market. This is why I love it. The barrier of entry is so low. Anybody can get in where they fit in. If you don't have enough if you don't have enough capital to buy your favorite company, continually put money in until you have enough to buy the company you want at the right price. How can you buy, sell, and trade stocks? One of the most common and easiest ways of buying and selling stocks, mutual funds, and bonds is through an online brokerage. Fidelity, E-Trade, TD Ameritrade, Charles Schwab's, the big boys, those are the ones that I would recommend. Anybody who has 24-hour customer service, because when you're dealing with your money, if things aren't going right, you need answers. These brokerages also have a tremendous amount of resources and education on their platform. Take advantage. Here are some resources to help you with your research. Here are a few websites that I use to get fundamental research to determine if a company is a great company, how it's growing, how it competes against other companies in the same industry and sector, and what price I want to get in at. All these companies are free. Remember, invest early, invest often, build generational wealth for you and your family. My name is Dashaun Outlaw. I am the founder of Outlaw Solutions Group. Follow me on IG for all your investment needs. Thank you so much for your time.